Today is May 3, 11:30 a.m. On April 12, you'll see this media report looking at Block's recent unusual options activity, and it was bullish. And you'll see here 58% bullish, 41% bearish, the Benzinga's option scanner. So how did it perform? Well, you'll see here it has gone down, right? And so we're following up on this April 12 because we made a video shorting Block, and we went against this Benzinga report. And then if you look up also on April 24 here, also another recent unusual options activity. What was that? Bullish also, April 24. So if you went bullish on April 24, where is that? On this date, right? This is April 24. You go bullish, you lose. So you see how following the media on unusual options active is not the way to go. You have to look at the data. And in this video, we're going to go over how to do that and also show you our current trades and the unusual options that we detected on Square today, which was an update on this day when that large institution made that trade. Today, they are adjusting their positions. So we're going to go over that. Okay, so let's take a look at their positions first. You'll see here 1001, 2,800, another 2,000 here. Same positions, same strikes. This was done at 9:59. Also, here's another 9:59. Same strike, same position, same institution doing the trade. This is now 2,800 plus 2,000 plus 441. This is at least 5,000 total contracts, right? And if you remember from that April 12 video we made following these trades, there was that 5,000 contracts. So you'll see that here, the 60 strikes here. And so that 57 strike here is also here, those 5,000 showing up on the volume here. And you'll, if you remember, our position was a bearish diagonal trade. We sold the 60 strikes, and then we bought the 65 strike puts here to create a bearish diagonal trade. And you could see that here. This is our trade we did on April 12th. Make sure to watch that video. We'll put that at the top here at the info cards. If you have that, you can click on that, or at the end of this video or in the description, the April 12 video gives you more context. So we're currently profitable. You'll see that here. We are above that zero line, and we are also very close to our max profit, which is right here, because we sold the 60 strikes. So our theta is very high at this time, which is very good. You'll see our theta is very positive because we are right here at that price, right where we predicted it to be. And so we will take some profits. We will also adjust our positions now, also because of the change in these the large institution making this trade today. And so, what does it mean? Because this position where they're doing the 60 strike puts and the 57 strike puts, this has to mean something bearish or bullish, right? We believe what they're implying here is that they are selling their positions here. When you look at this position, it could look like a bearish position because it could look like a, for example, if you looked at this, you could assume like they're selling the 60 strike puts and buying the 57 strike puts, right? What does that do? And so this is, let's analyze that. Selling that 60 strike put, buying the 57 strike put, and then you analyze that trade. Let's take off our trade. And so we have only that showing. Well, this is a bullish trade, right? This is, as the price goes up, it is profitable above that zero profit loss on the y-axis, right? So it would look like it's bullish. And that's why the media and these Benzinga option scanners will maybe report it as being bullish, right? However, that's not what's happening. We think it's something else. We think what's happening is that they are actually closing off this position. So they're closing and selling their position that they have on the 60 strike, which they bought on April 12. If you watch that video, you'll understand it more, that they bought the 60 strike puts on that day 3 weeks ago. And now they're closing that position now. And so by closing that position now, they're rolling it basically and buying the 57 strike puts. So essentially this is being closed. So all they're doing is buying the 57 strike puts. And so what is that then? Right? If you take off their this assumption, and if it's just this, then this is bearish, right? $59 currently, then it's profitable as it goes down. And so at the zero, this is all good for them if it goes down. So they take their profits, they roll down, right? And if it does go up, they have a risk reduction, not as much of a loss because they collected a lot of money from selling that 60 strike puts, right? So they are doubling down on their shorts position on block, and so that's what we think is happening when you actually analyze what's going on here on the tape. You can't just look at the tape too. So it's just not, when you look at the tape, it's very important that you also understand and you're following and tracking the data and how they're moving their contracts around or rolling them. Things of that sort is very important. And so that's what we do. We track these option contracts. It takes a lot of time and resources to do that, to follow these large institutions, what they're doing, to make sure that we get the right direction. And so make sure you're subscribed and you hit the bell icon, and you'll be notified whenever we see anything unusual. And so please smash that like button. We have earnings coming up on Square, and so this is something that is going to be very unpredictable, but we can use unusual option activity to get a better idea as to what's going to happen. Okay, so good luck everybody, and take care. Hope this was helpful.